to Trading Hour on CNBC TV18. Rather slow day today, but plenty of stocks to talk about. Satish Ramanathan, the Chief Investment Officer Equity at GM Financial Asset Management, joins us now to discuss his view on the market. Satish, good morning and thank you for being with us on the channel. I wanted to start by asking you about what's happening with these platform companies. It is, a big downfall that we're seeing across the board in stocks. Investors are exiting in a big way. What do you do with names like this, whether it's something like a Paytm, Nykaa, Delivery, PB Fintech? Do you stay away entirely or do you look for some opportunities here? Because some of them are seeing improving fundamentals.
Our philosophy is to buy into companies where cash flows are visible. As of now, in many of the platform companies, we do not see the cash flow coming through. And we would look at them at an appropriate time when the cash flows are visible and then consider them accordingly. But as of now, the valuations are a little stretched and we would wait for a better opportunity. That said, platform companies are going to remain as part of our economy, and we are quite convinced that they do represent a good opportunity over time.
But even after a near 50% fall from the lifetime high levels, you don't see the valuations attractive for these platform companies. Got that point. You recently launched a JM Midcap Fund, which closed for subscription on 14th of November. Is this the best time to get into midcaps now? A lot of, people are saying that perhaps the next leg may be driven by the large caps. Your thoughts on midcaps, the valuations right now, and in the midcaps, where is it that you are seeing value?
So thanks for this. In the mid-cap space, what we have seen over time is that mid-cap companies have restructured their balance sheets, and they are about as strong fundamentally as the large cap companies. And they also offer higher growth, and some of the sectors are not represented in large caps. And consequently, we believe mid-caps are the only way to go in capturing some of these high growth sectors such as healthcare, such as retail, and QSR. So these are some of the sectors that are well represented in mid-caps. The entire manufacturing gamut of companies are in the mid-cap space. We do not have too many of them in the large cap space. So structurally, we are fairly positive on mid-caps. And valuations-wise, they are about as good or as bad as large caps as things go. So we are pretty okay with that.
Okay, and within mid-caps, any individual sectors or pockets that look good to you from a longer run? Mid-cap IT is coming back marginally. You have, the specialty chemical space has so many companies that have recovered from their lows. There are some new listings there as well. What are the sectors that you like?
So sectors that we like are manufacturing.
Okay.
We definitely like the manufacturing sector because with Atmanirbhar and India coming as a China plus one alternative, and our demographics also playing out in terms of the labor pool increasing. I think India stands very well in the manufacturing space. And we think that India will become an alternate export hub as well. The second space that we are fairly positive on is, as you mentioned, mid-cap IT. Some of the structural IT companies like data analytics, etc., will be found in the mid-cap space. So we haven't identified anything as such, but we think that that's an interesting place to shop for. And the other place that we are also positive is the consumption space, be it retail or QSR. We think that's going to be a longer-term structural story. Valuations at the appropriate time, we would be considering many of these stocks as well.
Two of the pockets where we've seen high interest right now, one is defense, and the other one are these rail PSUs, railway stocks. Are these pocket segments that interest you? If yes, why? And if not, why?
So we do think that defense and railway PSUs have embarked on a new structural story, and it's all driven by government capex. but we are also cautious because what we have seen in the past cannot be easily forgotten, because receivables is something which are sticky. Government doesn't pay on time very often, and the order book is lumpy and volatile. So that said, I think we are on a good trajectory as it stands today.
And buy them right now, given the recency bias?
Yeah, the recency bias is one factor that pushes these stocks, yes.
Okay.
No, I think the question was, would you buy them now given the recency bias, or would you stay away?
No, I think the trajectory, the government momentum, and the cash flow that we are seeing, and the conviction that the government has in localizing defense, localizing railway supplies, and modernizing railways are factors that make us positive. But I just wanted to give a caveat that, that things can turn very quickly because the government doesn't pay on time very often. We have seen that in the case of infrastructure companies. We have seen that in the case of even capital goods companies. So we just need to keep that at the back of our minds and probably go with the momentum as it stands today.
Okay, that's on defense. I just had one more question on what's happening with the telecom space. The reason I ask is because as we speak, Bharti Airtel is at a fresh 52-week high. It's had quite a good run this year. I mean, it's up 30% this year already. Do you see further potential here for Bharti, Reliance in the telecom space, given the kind of positive triggers that they have?
I think telecom has consolidated significantly, and we can see it happening in our personal experience as well. That there are very few options in the telecom space for operators, and it's either Airtel, Vodafone, and or Jio. So when this kind of a structural consolidation takes place, it's a matter of time before tariffs start nudging up and we get better profitability. Also, in terms of capital efficiency, we see the telecom space becoming more efficient once they move to 5G. So we remain structurally constructive on the telecom space. But that said, it's still a utility. It still has government caveats coming in terms of pricing, in terms of the spectrum, things of that sort. So we have to play it accordingly.
Satish, pleasure speaking with you. Thank you very much for joining in. That's GM Financial View, the CIO of GM Financials. Let's talk about Kaynes Technology. That's made a strong debut on the bourses today. The company is listed at a premium of 32%. Vaishta is here with all the details and the important management takeaways.
Hi, Rima. Thanks for that. Kaynes